Hey guys, it is Eric Miller with Econologics Financial Advisors. You will not believe what is trending on Google right now. No, it is not the vaccine. No, it is not Kanye and Kim. And no, it is not the royal family. What's trending right now? The child tax care credit of 2021. Can you believe it? My dreams have come true. People actually do care about their personal finances. So in light of that, I want to give you 3 strategies that you can use right now to help minimize your taxes. So I'm going to drop the first one on you right now. Are you ready? All right. Okay, number 1. Section 139 of the tax code actually allows for employers, as long as there was a national disaster which was declared, which there was, you can actually reimburse your employees for qualified disaster expenses. So, if you give bonuses or anything like that, you can probably actually classify some of that income to them as Section 139. What's the benefit? Well, you still get the business deduction, but they get that income tax-free. So it's really a nice way to reward, especially good employees, by giving them income that they don't have to pay tax on. So that would be number 1. Number 2, it's right over here. All right, number 2, health savings accounts. Now, these are not new, but I see a lot of people that are not utilizing them. Look, if you have a high deductible health insurance plan and you want to get a tax deduction and then use that money for qualified medical expenses, it's like a triple tax benefit. So if you're an individual, I think the contribution level is $3,600. For a family, it is $7,200. And if you're over 55, you can dump in an extra $1,000. So it's a really good way to minimize your tax bill by almost $7,200, especially if you have a family. And it's a really powerful way to make sure you're paying for medical expenses as well. So that's number 2. Number 3 is that way. Okay, number 3. So look, you have a home, you have a business. You can rent your house out for 14 days out of the year and you can collect that money completely tax-free. So look, make sure that you're at least having some executive meetings at your house. You can expense the business, just make sure that you get documentation. You actually have to have the meeting. Make sure you get an estimate at a local hotel or a restaurant, but this is a great way that you can, the amount's going to be different for everybody, but $5,000 to $15,000 in total over 14 days. It's a very, very powerful tax strategy that not a lot of people are using. Okay, so I know I gave you 3 right there, and look, if you implement those, there's tens of thousands of dollars that you can save on taxes. But I got a bonus for you. Look, if you have a business or you have a piece of real estate that you are looking to sell right now, there's actually a strategy that you can defer your capital gains for 30 years and keep, wait for it, 93.5% of the sale proceeds. Now think about that. Most of you, if you sell a $1 million asset, you got to pay anywhere between 25 and 30% in capital gains that year. I have a better strategy. Keep 93.5% of the sale proceeds, defer the tax for 30 years, have more money to invest for that time frame. It's a very powerful strategy. It's complex, but you can save hundreds of thousands of dollars in taxes by doing this. So it's a really cool strategy. Not a lot of people know about, but I gave you 4. I gave you 4 right there that actually can save you tens of thousands to hundreds of thousands of dollars in taxes. Look, saving on taxes is not a passive activity. You got to take an active role. So get off your butt and make sure that you are looking for strategies and building a tax team that is trying to chop your tax bill down. Okay? So, hey, you know what? Keep trending on Google. Keep paying attention to your finances, and I'll see you next time.